U.S. job additions were revised lower by 818,000 jobs over the past year. Afternoon, we have quite the week with the Fed minutes coming out here this week and a largest job revision number that we have seen since 2009. Quite the headline, and we'll break that apart here in a little bit. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise here along the way. And I will be honest with you, this headline certainly is very attention grabbing and maybe a little bit over. So we will talk about what this means, and it is important. Don't get me wrong, but you're probably seeing some of the news stories about this being the biggest jobs revision since 2009. And although it is, keep in mind it may not be that big of a story, but it is still very important. So we're going to talk a little bit about that. Before we get into the jobs number, what I want to cover briefly is the Fed minutes that came out on Wednesday, so just yesterday. Probably no surprise, but they did make it a point to cut in September is very likely. Like that's kind of the general takeaway. So the Fed minutes come out, it talks about what they had covered in the meeting, and basically that's the general takeaway. They had actually discussed cutting in July, cutting the Fed funds rates in July. This is reading that meeting that was most recently at the very end of the month of July there, but they ended up voting unanimously, as we all know, to hold for another meeting. So not to say for sure they will cut in September, and we'll talk more about this here next week for sure, but the Fed Chair Powell will be speaking at Jackson Hole tomorrow on Friday. And I don't think he's going to say that they're going to cut either. I don't think they will until they make that official. But it certainly looks very likely that they will be cutting rates there in the September meeting coming up. So that's maybe the takeaway on the Fed side of it. But as kind of a data point leading up to that as well, or leading into how the Fed may be viewing the rate changes, we had a pretty big news story to cover. And basically, it was a surprise in terms of the jobs data reconciliation on just yesterday on Wednesday from the past year. So this is the headline, right? Largest jobs revision since 2009. And again, it is a big deal, but just to be clear, this doesn't necessarily mean like, the headlines might suggest that we're in this huge troubling scenario. However, again, it is a big difference. And basically what this suggested was that U.S. job additions were revised lower by 818,000 jobs over the past year. So that is a big difference. That's almost 70,000 jobs a month in terms of difference, in terms of what we thought we knew going into this reconciliation number and what came out of it. So obviously this sounds bad for the economy and the labor market in general, but you would think if you've been following the markets lately, you would think this seems good, right? The Fed has been talking about that they're going to cut rates if the labor market cools off a little bit. And basically the markets up to this point so far have been so excited for this Fed cut. And, again, given the focus now lately on the Fed suggesting jobs as one of the bigger factors in their decision, you would think the market would see this as good news. But I think what's happening, basically the last couple of days, markets have been pretty flat as a result of these data points. And I think what's happening is that the markets are realizing that the impact of the Fed kind of dictating rates and the reality that a cut may be coming may be a result of tightening economy, right? A tightening economy and maybe even a slowdown. So I think that we've seen the markets pretty neutral both days so far. I think the reality is kind of setting in a bit that, in general, when the Fed cuts rates, it's typically for a reason. It's not necessarily to spark the economy or add more fuel to the fire, but more so to make sure, well, let me take that back. It is to add fuel to the fire, but usually because there's fuel that needs to be added, maybe is a good way to put it. So nonetheless, I think it's a very important kind of perspective as we gear up for the next Fed decision there in September. And definitely, you may want to stay tuned tomorrow. Fed Chair Powell will be speaking at Jackson Hole, which of course is going to be what we cover there next week. So it's a bit quiet a week ahead here as far as data, but we will be catching you up on what the Fed shares tomorrow on Jackson Hole. And then the following week, we get right back into heavy data around income, spending, inflation, you name it. But before we break, I do want to cover a question of the week, which is basically, what is this jobs number reconciliation? So for a little more context around what's actually happened here last couple of days, is basically what happens is every month we get two data points. We get the non-farm payrolls, right, which we cover quite a bit, and we get the unemployment rate. Non-farm payrolls, basically they reach out to employers in the area, not all employers, but they reach out to employers and they basically ask who still works there. On the unemployment rate, what they do is they actually send out a survey of individuals. And I was actually at an event Tuesday, and one of the chief economists for a fund company was talking a lot about this. So it was really helpful heading into this jobs number. But basically, this is what they shared. These are the ways that we get these two data points. And basically, this is how we look at jobs data. And once a year, every year, they look backwards and they reconcile the two because the numbers don't exactly add up, right? They're different ways of getting data points. And so what they do is they reconcile the two once a year. So they look back March 31st, I believe it was, from the conversation at the event on Tuesday, March 31st, all the way back to March 31st, 2023. And basically say, okay, at the end of the day, what was the real jobs number? And in this example, again, it suggested that those job additions were revised lower by, again, 818,000 jobs. So it's certainly a big number. Now, important to keep in mind, this is March 31st to March 31st. So what this does not reflect is the most recent 5 months or so. And the reason I'm highlighting that is because we have seen some early signs of cracks in the labor market recently, and it will be very interesting to see how revisions come out on some of those jobs numbers as well. But nonetheless, this is a very important data point in all honesty. The headlines certainly are making it maybe a little more scary than it needs to be, but it is an important data point, and especially how it relates to the Fed's path ahead. So be sure to tune in next Thursday. We will make sure that we cover the Fed Chair Powell's comments from Jackson Hole tomorrow, and then also gear up for some big data coming up the week after that. In the meantime, have a great upcoming weekend, and we will see you next Thursday at 3.